Dr. Rick dropping in on you. Hope everybody had a great weekend. I hope you're ready to get things off to an unbelievably powerful and positive start this week. Guess what? It's Monday. Money Monday. Guess what we're going to do today? We're going to buy, for many of you, your first portion or percentage of a company. And that gives you ownership into something for many of you for the first time. No, nothing wrong with that. Everybody starts somewhere. But I want to do that. I want to help you today buy your first piece of, and how are we going to do it? We're going to do it the safest way possible when we're talking about the market, and that is into a proven uh, vehicle, and it produces compound growth, and that is the S&P 500, the Vanguard S&P 500, which is and should be considered the foundation of building generational wealth. Warren Buffett, Ray Dalio, David Swenson, on down the line, all of these guys built their wealth through investing, and every last one of them says it's the most neglected and the most powerful element and component of long-term sustainable growth. And imagine compound growth. Compound, what is compound growth? It's the reverse of what most of us get into as consumers. Compound debt. Compound debt is you buy a house for $300,000 at 5%, 4%, some of us 7, 8%, whatever it is. And then it's accumulated annually, compounded annually. So over 30 years, it's compounded. You end up paying $800,000, $900,000 for a $300,000 house. That's compounded. That's how you make them rich. How you make yourself rich is by investing in something that returns to you compounded. So in other words, growth means that you're not only gaining the interest on what you are contributing, but you're also gaining interest on the interest that paid on what you contribute, and you just consistently pour in. So even when you do very small portions of it over time, it builds. Now compound interest and stuff like this works best when you start. The younger you start, the more time you have to make it work for you. The later you start in life, the little bit more aggressively you have to put into it in larger amounts to get the return you're going to look for in shorter periods. But it's never too late to start. And parents, teach your children the importance of compound growth. It is absolutely imperative that you learn this. So we're going to take a real quick dive into it. I'm going to show you just how easy it is to actually purchase a piece of stock. Now, I'm not going to tell you what other stock to buy outside of this one. This one I will stand on. This one I believe in with soul and heart. The other stuff I do my work and my research like everybody else. But I haven't talked to, I did not interview. I interviewed some of the biggest one when I created the Legacy Wealth Path to Generational Wealth course. That took 10 years of interviews, research, book reading, everything I could to learn about the top performers in wealth building. And what I learned is they're no different than us. Most of them started out like us. I didn't research silver spoon billionaires. I researched people who started with, you know, meager beginnings. In other words, under six-figure home incomes or slightly above. And I say slightly above only because Robert Kiyosaki's dad made six figures, and that was the poor dad. If you ever read his book Rich Dad Poor Dad, you know what I'm talking about. So, and what I want to do is I want to walk you through a real quick process. I want some of you, if you're able, to pick up your phones, because some of you are going to be able to do it with me in real time if you have Cash App. But I'm going to give you what I believe are the top five apps that you can download that will allow you to open up account for trading and buy stocks using as little as $1. And then I'm going to show you how you can do it on Cash App live while I'm on here. So public.com right now is one of the top choices out there. It's blowing up. It's getting bigger and bigger. It's a 5-star app right now as far as customer satisfaction, customer approval. You can start investing with little as $1, gain access to exclusive investment opportunities and insights and so much more. It's a great way to get inside of it and learn as you go, and then build momentum and then increase investments as you learn. Here's the thing, never play the game beyond what you know. So never invest what you cannot afford to lose. Then you're no longer investing, you're gambling. There's no certainty. Here's the other thing that I want to put out there. There's no certainty. One thing that I got from all of the top investors, absolutely none of them said they could predict the market. Matter of fact, every last one said they couldn't. That's what you get when you start talking about actively managed mutual funds. Actively managed mutual funds lose 96% of the time. 96% of the time, actively managed mutual funds lose. Only 4% win. And it's never the same 4%. So you can't guess. What you do is you find solid, long-term, viable entities that have proven to be able to survive volatility, upturns, downturns, economic crises, and everything else, and they bounce back. You want to be able to look and learn how to read financials. You want to be able to understand history, and also be able to look at geopolitical influences and understand what's going on in the world and how it may impact certain industries. All of this stuff you need to be able to understand. You develop that over time. But what you got to understand is that in doing that, you develop the capacity to do it, but you do not ever get to where you can predict the market. Too many variables, too many things that can happen. But this is what they all say: get you viable companies that survive. Here's another thing, and I'm going to get to buying this stock very quickly. Look, here's another thing. You haven't experienced a loss in the stock market until you sell. So say for instance you buy stock, and I've shared this with you before, you buy stock in something and something happens and the price starts to drop. Don't panic. If you did your homework and the company has what it takes to survive, it'll rebound. There's downtown turns in the market every 4 to 5 years. It gets a little crazy. The last d- decade and a half has been crazy, where you get these sustainable downs and sustainable highs, but it'll balance back out 4, 5, 6 years. You're going to get this cycle of overinflation, crash, overinflation, crash. And that comes from a lot of different things, so you get it. But the thing is, find the companies that rebound, because here's what happens. When you panic and sell, that's this guy called a crisis investor. What he does is he waits for uh, stock to drop for whatever reason significantly, and people to panic, and he buys up the stock or she buys up the stock. Why? Because to them stock just went on sale. They know what the company's going to do. They know it's going to recover. They believe very strongly it's going to recover, and so they buy off of you. And that's something I learned a long time ago when I used to see people talking about sell-offs, stocks dropping, people are selling off. And I'm going like, who's the dummy buying it? The dummy buying it is the genius. The dummy buying it is saying it's going on sale. Matter of fact, Ray Dalio has gone on record as saying the stock market is the only place where something goes on sale and people panic. So don't panic, hold. You haven't experienced the loss until you sell. Once you sell, you finalize that loss. If you hold, you get a chance to rebound. Now, there are certain times you have to look and understand what's going on with a particular company, and you may want to sell off and buy something different. But you don't want a lot of liquidity either. You don't want a lot of cash laying around because the value of the dollar is highly volatile right now. But here we go. So public.com, Sophie is commission free trading. That's another thing. No matter where you trade at, you want to know what they're charging you per trade, per purchase, per sale, so that you'll know what you're spending. One of the biggest things that people get hit with in the money market is commissions and fees that they don't understand. $17 billion a year are taken away from 401k owners because they don't know what's going on. 17 billion hidden commissions, fees, and everything else is in there. 17 billion. So be very aware of that. So Sophie is again, so public.com, Sophie, Sofi. Then Acorns, that's an old one. It's been around forever. Robinhood's been around forever. They currently have a your first 30 days free. You can start trading with little as $1. Sophie as little as $5. Then there's Plink, Plynk, and Plink will double whatever initial deposit you make up to $75. So that's a way to actually make your first investment. Invest and they'll double it up to $75, and you can start with your first purchase as little as $1. It doesn't take a whole lot. Now, here's the thing: Cash App. So everybody who has Cash App, grab your phones, open up your app, and on your home page, you should be able to see stocks, savings, uh, different like that. So you can literally trade Bitcoin stocks, and whatever. So all you do is click the stocks button and then type in S&P. It's gonna pull it up. It's gonna probably say Vanguard S&P. Matter of fact, let me just hit mine. I'm gonna tell you exactly what it's gonna say. Vanguard S&P 500 ETF, electronically traded fund. Okay, so you got um, where am I? Okay, so basically all you do is you set that up. When you set up a Cash App, you got to give your tax information and all that stuff like that. Especially now, because in case you didn't know, the gigging on Cash App without paying taxes is up. The government is making Cash App and all other places where you can collect cash payments for doing gigs, making them report any money over $600 received for payment of anything. So you're gonna have to pay on that. But anyway, what you do is you go in and you click on it, and say you want to buy it for $5, you want to buy it for $2 worth, you want to buy $100 worth, whatever you can reasonably afford. But now understand, this is going to be there. This isn't something you want to be ever thinking about liquidating within the next 10 to 15 years. You want this to literally sit there, and you want to add to it. Now, the beautiful thing I like about Cash App is you can actually set it that anytime I don't know how much, I'm very, very creative about how I use things, so I try to get the most out of it. You can actually get a debit card with Cash App, and you obviously can connect your bank. You can connect it to your Apple Pay, Google Pay, and all that. But you can also get a debit card. Well, when you make purchases with that debit card, you can actually set it up to where it will round up to the next dollar every time you buy it, and it'll put that into a purchase of a particular stock. So you can designate what stock you want to do. But what you want to do right now is get your first piece of, actually, you're getting your first piece of the top performing 500 companies, publicly traded companies on the planet. So you go in, you put your $5, your $10, your $50, your $100, whatever you want to do. And what I can tell you is consistently is pushing 8 to 10% annually compounded. Go find you a compound calculator on the internet and play around with 8%, 10%, anywhere in there. Play around with how much you want to put in, play around with what you want to make and how many years, and it will tell you what you need to put in. Play around with how much you have to put in each and every week or each and every month, and it'll tell you how much you'll have in X amount of years. And you can go on and on with these different ways, and it'll really literally show you what you can do over time. And obviously, the sooner you start in life, the better off you will be. So again, I want you to truly get excited about doing something. So again, today, don't wait, don't pass up, don't say I'm going to do it, because we're talking as little as a dollar, $5, $10. You can actually start purchasing, and that's a low risk, but it gets you in the game, it gets you interested, it gets you feeling things out and learning how it goes. Again, I will really truly emphasize, do not go in deeper than you are mentally and informationally prepared. Know the game, learn the game, be able to do that. That's why I created the Legacy Wealth Pastor Generational course. Reading financials, researching companies, the different variables of it. Understand how all that stuff works. You're still going to take hits. That's just simply how it is. You're still going to take hits, but the goal is to do it in a way. That's why you diversify across assets. Why? Because you are hedging against loss in any one particular area. You don't put all your eggs in one basket. You diversify across assets, and you hedge. And that is what keeps you afloat and you do your research. You be aware. All of this stuff matters, but you can do this today. Go on. Um, if you have Cash App, literally right now on your phone, and you've used it, you can literally own a piece of stock in less than 3 minutes. Go on, set it up, pick S&P. That's the only thing that I'm actually going to promote on here. I may talk about some other stocks that I've seen performing well or that may be performing well, um, but I'm not going to tell you to go get it. I'm going to tell you to research it and check it out. But I'm telling you, the S&P 500 is something you need to do. We're going to talk about Wednesday. We're going to talk about the importance of investing through a trust. The difference between investing through a trust and investing as an individual, and the benefits and the pros and cons or whatever. But definitely not. If you're having to use Plink, Robinhood, Acorn, Sophie, or Public.com, you're gonna have to take whatever it takes to download the app, get all your information, and get it set up and get accepted, and then purchase. That's how long it's gonna take you. But if you got Cash App, you can literally in the next 10 minutes own S&P 500 stock. So I challenge you, buy that first piece. If you don't already have stock, buy that first piece. If you have stock and you are not in the S&P, you are missing out big. Again, all the major players, I mean major players that have been successful. When you say wealth and investment, their names you think of. Every last one of them say compound. Compound growth is the consistent, most trusted way to build wealth over time. I'm not one of those people that advocates the flash in the pan, day trading, and all that stuff like that. Back in the day, I did a lot of stuff in the forex and all that, and there's definitely ways to make money in it. But it's one of the fastest way to get rich, but it's also the fastest way to go broke. I'm more about sustaining, building, developing, literally the foundation, building, so that when you take a hit, the whole building doesn't come down. If you build on cards, one comes down, everything comes down. We're trying to build solid. So that's the thing I want you to do. Now, I hope that this really truly has blessed you. Share it with people, share it with people, share it. If you like what you're getting, click the like button. If this is on a channel in which you can subscribe, subscribe. But we have to start building. And finally, for those of you who want to make some moves today and learn about investing, learn about stuff, learn how you can actually start your own business online within 7 days, look in the description box. There's some stuff in there for you. Everything today is 50% off. So if you've ever been looking to do anything, everything today is 50% off. On that note, I'm out of here. As I always say, I live my life on full so that when I leave this place, I die on E. I'm challenging you to do the same thing.